if you look at the Fed, you either take the bet that they need to do something to spur inflation, or you believe Janet Yellen in saying, look, the labor market at some point will generate inflation. Where do you stand?
Fed guidance, Janet Yellen, clearly, that's what we've been saying for a while. We think the tightening is going to continue into 2018, and they're serious in terms of their intention to reduce the balance sheet through the next few years.
All right. What does that mean for your investment portfolio?
It means that we think that while lower for longer is probably over, interest rates are going to remain subdued. As you mentioned it, inflation is not an issue. The Fed and actually the ECB next year as well will try to balance, making sure that they don't crash the economy and at the same time get the yield curve where they want it to be.
And when I look at the equity markets right now, I really want to address the negativity that's out there. I've seen article after article after article doubting this bull market. Explain to our audience on a global basis why equities are high in value. Is it simply because of central bank realities?
Well, it's central bank realities, but it's also arithmetic, isn't it? I mean, if you look at the value of equities, it's the discounted value of future cash flows. Now, long and short rates are very, very low all over the world, and therefore that implies, high equity valuations. In addition to that, over the past 12 to 18 months, we've seen pretty good earnings growth and a lot of buybacks. So that explains why equities are relatively high in valuation terms.
I look at it, and again, this goes to William Priest, will be in our next hour. Are equities being supported still by the new religion of return on cash, of dividend growth and share buyback? Is that another core reason for this lift?
That's clearly another core reason. I mean, we've been saying for the last 10 years that dividends will to become more important in people's mind in terms of how they invest. And actually, if you look at the market in terms of dividend yield, particularly in Europe, but also in the United States, dividend yield valuations don't seem as stretched as PEs, or price to cash flows.